US Capitol Federal Reserve Building busy, downtown streets headlines GDP growth slows, Fed raises new pressure, resumes or soft landing. America's economy is still growing, but the pace is starting to slow. The US Commerce Department just released its Q2 2025 GDP report, showing economic growth at 1.4%, down from 2.1% in Q1. Charts from GDP Trends Commerce Department press release economist roundtable clips. It's the most surged quarterly performance in over a year, raising new questions about the strength of the recovery, the impact of higher interest rates, and what the Federal Reserve might do next. So, what's behind the slowdown? According to the data, consumer spending, which makes up about 70% of US GDP, pulled slightly in Q2, especially on big-ticket items like cars, electronics, and furniture. Shoppers at mall, car dealerships empty checkout counters. Meanwhile, business investment slowed amid together tighter lending conditions, and residential construction dipped due to President's mortgage rate pressure. Economists say that we are seeing the lag effects of 2 years of rate hikes. The economy is still moving, just not at full speed. At the same time, unemployment remains low and inflation is easing, leading many experts to argue that the US may still maybe track on for a long soft landing, avoiding a resurgence while cooling price growth, slowing inflation trading to downward, and employment holding steady. Fed Chair Jerome Powell said in the conference, "We are encouraged by the disinflationary trend and resilient labor markets. Our decisions will continue to be data-driven." And that's where the debate heats up. With GDP growth slowing and inflation near at the Fed's 2% target, markets are now betting on a possible interest rate cut as early as September. Wall Street trader reacting to Fed commentary, bond market shifts headlines, September cut on the table. Stocks rallied on the news, with investors anticipating a shift in Fed policy that could boost borrowing, housing, and businessman activity in the fall. Market analysts say that the slowdown gives the Fed cover to ease rates, but they will want to be sure inflation does not rebound fast. Still, some economists are arguing caution. They warn that cutting rates too soon, especially before wage growth and cooperative earnings stabilization, could undermine recent progress and trigger volatility later in the year. Policy debates resumes, warning headlines, interviews with skeptical analysts. Skeptical economists say that slower growth is not the same as the crisis. The Fed should be careful not to overcorrect. So what does this mean for everyday Americans? Slower GDP could mean fewer new jobs, President's challenge in housing affordability, and potentially lower interest rates, which could help borrowers but hurt savers. Families budgeting, mortgage rate adds, people checking credit cards. For now, all eyes are on the Fed's September meeting, where policymakers will weigh this new data against ongoing global risking, including energy prices, supply chains, and geopolitical tensions. Q2 GDP slowdown, warning sign, or normal shift. Follow for updates on the US economy and Fed policy. The economy is cooling, but it has not support. And as the Fed decided its next move, the stakes could not be higher, more than Main Street and Wall Street alike. Subscribe for real-time economic coverage and market insights.